All right, here we go. Stocks by the numbers. Welcome back. I wanted to do a quick update on SentinelOne Incorporated, ticker symbol S, listed here on the New York. This is a cybersecurity company that we were tracking for a while, and we looked at it a while back. We had the big drop, and then you can see it had a big rally up to almost 30. Had a pullback here. I was mentioning I drew out a couple of these trend lines in the past, expecting a drop down to a lot of these support levels. This, as you see, is going from the bottom here, first week of June 23, and you can see cutting across, hitting the bottom of the body right there on Friday, May 31st, 24, and that's cutting across, and you can see that we were on the up and up. The company just reported earnings. If we extend our line out, bang, you can see that we stopped essentially right at that line. Right, we were bouncing around, got slightly above it, and now we closed essentially right at that line, 1739, dropping about 2.25 points, 11.5% after reporting earnings. It was technically a beat. However, the company said that they might run into some turmoil throughout 2026, so that caused the stock to drop. However, analysts still seem pretty bullish on it. And in my opinion, I agree with them because, as we said, well, as I say, follow the money, follow the revenue. And this company just consistently keeps growing and really beats earnings more times than not. So, in my opinion, I do like them, even down here at this level of about 17 and change. We were looking for a drop again down here a while back. No, yeah, it wasn't here. We were looking for, I believe, when it broke here and it started to get into the 19s and down into the 18s. That's when I may have mentioned it again in the Discord. I don't recall. We can go back and double check, but I like it down here at this price. And company beat on the EPS side, 2 cents a share. Analysts expecting 1.6 cents. Revenue comes in 229.03. Analysts expecting 228.36. So slight beat right there by about 1/3%. And if we check recent news, we can see that neutral here at UBS. Price target cut to 19 from 21. Not a big drop, but they lowered it by about 10%. But as we know, these analysts feed off of the recent news that's given to them, right? So if we have a good quarter, but we guide that next quarter or next year might be a little uncertain, let's say, analysts will, of course, lower their price target and, just go off the most recent news. But in my opinion, I do think it's worth more. Sentinel One maintained positive. A Susquehanna price target cut from $25 to $24. So not a big drop, right? But I guess they felt they had to say something. Wedbush lowers price target on Sentinel One from 25 to 23. Mixed Q1 26 results. Keeps the outperform rating. Citing mixed. Fiscal Q1 results accompanied by a difficult macroeconomic environment. Company brought in more revenue than expected and better profit margins, while ARR came in lower than Wall Street expectations. Analysts' annual recurring revenue, for the record. Analysts led by David Ives, okay. Wedbush also attributed lowering its fiscal 2026 forecast to a challenging macroeconomic situation in April, while remaining, quote, bullish on the long-term growth story as momentum for Purple AI data solutions continue to see very strong growth. So again, it's a situation where we have to potentially see a little bit of price target lowerings, maybe a little rating downgrade, right? Because the analysts are just feeding off of what was recently said by the company. However, the long term, again, the big picture, as I always say, as you see here, bullish on the long-term growth as momentum, again, continue to see strong growth. So that's what I mean. The growth of the company cannot be denied. So in the immediate short term, trying to time a call, maybe we can pull back from 17, even maybe it could touch the 16s, who knows again, right? But overall, in the long term, in my opinion, I like it. And even if it dances around here in the mid-high teens for a little while, you and I both know if we turn around 6 months from now, 12 months from now, the stock's back up in the high 20s, potentially 30 plus, hitting new highs. Again, you're going to be up roughly 100%. And if it takes longer than 12 months, obviously you're paying half the amount in taxes. So do what you wish with that information. But Wedbush maintaining outperform rating, has an average rating of overweight, mean price target of almost $24, stock down here at 17. Maintained equal weight by Barclays, price target cut from 21 to 19. Sentinel One likely to face challenges despite attractive endpoint market, says B of A. Sentinel One is likely to face challenges ahead, although the endpoint market continues to be, quote, an attractive domain. Right? So you have to pay attention to what's really being said about this company. So again, overall, they can't deny the growth. But here in the immediate short term, they felt, again, they had to take action. They had to lower some price targets. Company has been reporting, quote, uninspiring results for a few quarters now. Well, I don't know about that. And has lowered its fiscal 26 outlook for the second consecutive quarter. Sentinel One attributed the fiscal 2026 guidance cut to, quote, macro uncertainty and deal fluctuations. And again, we know that these companies, they try to prepare, Wall Street and investors for what could potentially be coming if they see something on the horizon. But, it's like we used to say as brokers on the phone sometimes, I'd rather underpromise and overperform. Right? So this may be a situation where they're just kind of giving you a heads up that we could potentially run into a couple of obstacles, right? We could maybe start reporting mixed results, but we're kind of under promising 2026 results today, and we may overperform on them over the next several quarters, right? So in my opinion, that's the way I'm looking at it. Of course, I'm being optimistic about the situation because I said I like the stock. But for the record, I do not have a position in Sentinel One. But I did always say I liked it. It did look good in the 20s, I believe, when we first started looking at it. But, we were looking at the numbers and we were saying if you can get it in the teens, obviously it'd be much more attractive. And that's where the stock is now. So, just consider throwing it on the watch list potentially. Again, cybersecurity company, right? If you want something a little different, as opposed to just, graphic cards or, computer hardware or something like that. Additionally, said the business scenarios look, quote, weaker as net new annual recurring revenue fell 26% in fiscal Q1 from a year earlier, yet the company still beat earnings. B of A Securities downgraded Sentinel One to neutral from buy due to, quote, weak trends and lackluster guidance, lowered its price target to 21 from 24. Okay, we're reading random updates. Maintain neutral by D.A. Davidson. Price target cut to 17 from 18. All right, well, that's where the stock is, so I don't know who that update was for. Cybersecurity is a flop this earnings season. I don't know about that. Agree to disagree, as they say. Plummeted Thursday. Market Digest lowered annual guidance. Latest disappointment. Look to be causing customer hesitation. The downward move contrasted starkly with the tech-heavy NASDAQ composite, which was rallying 1.3% after a leading chip maker NVIDIA posted strong earnings, and a federal trade court struck down President Donald Trump's so-called reciprocal tariffs late Wednesday. Right, but NVIDIA is hardware. This is cybersecurity. Analysts at Bank of America, J.P. Morgan, downgraded Sentinel One to neutral from buy or buy equivalent following the earnings report. Quote, Sentinel One's third ARR miss in 5 quarters likely translates into a longer recovery as the company works to rebuild investor confidence. That was a J.P. Morgan analyst, lowered the price target to 19 from 21. The latest result shows a continuing trend of softer results from cybersecurity peers, said KeyBank. Uncertain macroeconomic conditions are causing deals to be pushed to the future, who rates the stock sector weight without a price target. In a call with investors, CEO said Sentinel One saw improved trends in May, expecting growth in the second fiscal quarter to be better compared with the first quarter. quote, this was mostly isolated to kind of a first quarter dynamic. Referring to the decline in deals, SentinelOne appears to have been affected more than peers such as Palo Alto Networks. Well, yeah, we knew that one was a winner, of course. Nancy Pelosi, shout out. Potentially due to a higher proportion of new customers, according to Jefferies analyst. He is still bullish. Buy rating, $23 price target. That's what I mean. It's another situation where they know value is there, but they just had to take a step back in the short term based on what is reported. Cybersecurity peers, Fortinet, Palo Alto, also disappointed with their respective earnings earlier this year. So, you know what I'm saying? So they're trying to make it seem like the rest of the companies in the sector are stable and are potentially better investments, right? And they're bashing some weak fundamentals here on SentinelOne, yet at the same time, we have the quote-unquote cybersecurity peers also reporting rough earnings here. So, as we know, sometimes the sectors, we have the ups and downs, right? The peaks, the valleys, the ebbs, the flows, however you want to call it. And that's why we know that sometimes it could be cyclical. Business goes in, business goes out. But in my opinion, again, overall, the long-term growth, I believe, is there. SentinelOne lowered the full year 26 annual recurring revenue guidance, $996 million and just above $1 billion. Down from between just above $1 billion and $1.012 billion previously. I mean, that's a very slight decrease. I mean, that's like a couple of $1,000,000 on about $1 billion. So, I mean, technically a drop in the bucket, but we know that if a company previously lays out, oh yeah, $1 billion, now we're bringing in, oh yeah, 990, you know, technically the numbers were lowered, so it's viewed as a negative. But, I mean, we've seen larger changes, right, in companies' future quarter guidance, future fiscal year guidance. We've seen big corrections in the past. And something like this, I don't know, it really doesn't seem like much of a big deal to me. SentinelOne's per share loss for the quarter ended April 30th, came in 63 cents. Revenue $229 million, largely in line with expectations. Annual recurring revenue was $948 million, slightly below expectations of $952 million, right? See what I mean? I mean, $4 million on $950 million, that's not a big deal, right? If we lost a major deal, if we lost a major client or contract, and now we're reporting $868 million instead of $952 million, you understand what I'm saying? Then that's an issue. This year, oh yeah, we might be $3-4 million lower than what we initially anticipated. In my opinion, that's not an issue. Because we've seen, again, something similar with Fubo in the past, right? You remember? And they came out and they were like, oh yeah, it might be rough. We have to lower guidance. And I said, give them a quarter or two. And if the numbers keep coming in above expectations, they may reiterate the original guidance numbers that they laid out before they lowered them. And that's exactly what happened, right? So again, something like SentinelOne could give them a quarter or two, and then the guidance gets readjusted. So you never know what can happen. Stock was down 11%. Currently trades with a forward PE ratio of 81.9, a higher valuation than Fortinet, Palo Alto, lower than CrowdStrike. Average forward earnings ratio for NASDAQ-listed companies is 26.7. Again, people only look at fundamentals and mention PE, you know, like in the comments or in these articles, only when it's convenient for them. It's the smallest up-and-coming company in comparison to those quote-unquote peers, right? So, of course, it's going to be trading at the highest multiple, the highest PE. That's the way it works. Look at something like Celsius, perfect example, right? Celsius Holdings, energy drinks. The company was consistently growing, consistently beating earnings, PE through the roof, right? Market cap to revenue comparison through the roof. And then you go back and you compare it to, you know, the dividend king in the software sector, something like Coca-Cola. And yeah, those numbers, those fundamentals are more realistic. They're more grounded. So, again, something like that, mentioning the forward PE compared to the larger companies, in my opinion, it has no weight at all. Sentinel One average rating, yeah, we read that already. UBS cuts price target from 21 to 19. Wells Fargo, price target cut to 18 from 22. Yeah, see, they're being a little extreme in my opinion, because again, the price targets supposedly are for the following 12 months. So, I don't know, everyone lowering, 17, 18, 19. I mean, that's where we initially pulled this stock back to now, and we're potentially ready to bounce off support. So, me personally, even in the short term, I would keep my price target at 20 plus, but that's just me. And of course, we had the court's ruling supposedly against Trump. Oh yeah, E.L.F also. E.L.F had a really good day today. But JP Morgan price target from 22 to 19. West Park Capital maintained buy. Price target cut from 31 to 25. All right, hey, listen, I respect these people. I respect these people because they see the writing on the wall, right? They're maintaining that mid-high $20 price target. They were at 31. Big respect, right? I just said before, in my opinion, again, 6-12 months, you might see it run to 27, 28, 30 plus. Even maintaining here at 25. I respect it. West Park Capital, shout out. Outperformed by Bernstein, sorry. Price target cut to 25 from 27. Outstanding. And someone mentioned share buyback. I'm looking for operating expenses increased by almost 20% due to elevated R&D. Okay. Holding almost $200 million in cash. Backed by the robust market demand trends, the company debuted its share repurchase authorization program. Its board of directors have authorized $200 million worth of share repurchases under the new program, which are to be made from time to time in the open market or through other methods subject to market conditions and regulatory requirements. So, again, a lot of people usually view share buybacks as a good sign, right? Because the company not only is able to do it, but also the fact that usually, especially if it's kind of a growing business, usually when you see share buybacks like this come out, especially as the stock has been struggling over the last several months, right? Look at that. This usually is a pretty good sign, because what that tells you is the company believes in themselves long term, and of course they feel that the stock is undervalued and over time will climb back up. So they feel that down here in the high mid-teens, we'll say, over the next couple of months, they feel that this is an attractive price. And in my opinion, I agree with them, because of course we can say that almost every stock is, to some point, is overvalued, right? So you and I both know if markets just start tanking, yes, practically everything across the board is going to go down, right? Except inverse ETFs and things like that. But right here, again, looking at this support trend line, the fact that the stock is down here in the teens, and it looks like myself and even a lot of other analysts were holding, 20, 25, even we saw $31 price target. So again, over the long term, everyone for the most part is in agreement that there's value here. In the short term, we could pull back to the fib again as we broke here, 16.5, back to 15 maybe. But overall, I personally do like it, and I know it was trending. People brought it up in the Discord. So in my opinion, long term, it does still look like a decent grower. And, now you get it at a more attractive price. But that's pretty much the update for SentinelOne. Excuse me, I wanted to see what could we look at real quick. AI had a good day. C3.AI, ticker symbol AI, here on the New York. This was one that we looked at in the past. I honestly don't remember when, though. It looks like because of course, if you recall, I got locked out of my account, so I lost my original trend lines. But it looks like, yeah, maybe we were tracking something like this. And we had like this triangle also, maybe. I don't recall how I was looking at it. And that's why I hate when I lose info and things like that. But it's on me. Company just reported earnings, reported a loss of 16 cents. Analysts expecting a loss of 20 cents. Really nice beat on the profitability side by about 20%. Revenue comes in 108.72. Analysts expecting 107.76. So they beat that by almost 1% or roughly $1 million. This stock, in my opinion, was overvalued, even when we were up here in the 30s. Again, I don't remember originally when we looked at it, but you can see you had to break up here to about 45, and then you had a big pullback to about a third of that, down to about 16, 17 and change, 1703. And since then, we rallied up, and of course, we had earnings come out. So let me see. 3.5 billion market cap. That's not too bad. I mean, company bringing in just a couple of $100 million. Profits have been healthy, but of course, we've been dropping. See, we can see kind of the opposite trend taking place when compared to something like SentinelOne, which is why something like AI, I would wait for another big dip like we had recently, down into the teens. Because something like this, I mean, technically on paper, you should be able to buy this at half price, down at like 13 a share, believe it or not, in my opinion. Will it go that low? I have no idea. But again, something like this, it's trending. AI, for the most part, we've been beating. So you want to catch something like this at a big dip where you can potentially view the shares near undervalued or fair valued valuation, if you will. But technically they beat. Contract U.S. Air Force increased to $450 million, extending its predictive maintenance program to October 2029. That is a good sign. Again, $450 million, huge, right? Huge amount of money. But again, we're in 2025, and it says the contracts throughout October 2029, right? So people have to take that into account as well, which a lot of times they don't. People see news like that and they're like, what? The company just got $450 million. No, it's $450 million over the next couple of years, right? We laid out the contract, we extended it out to October 2029, and you're going to get roughly looking like, 70, 80, 100 million the first year, right? And then, 90, 100, 120 million the next year, you understand? Almost like a sports contract. So, good news, but it's not an immediate cash injection. Maintained as neutral, UBS. Price target raised to 28 from 26. See, it's funny how they're more bullish on this one, yet very bearish on something like SentinelOne. Price target cut to 27 from 28. Again, I mean, these ratings were changed as the stock popped and is in the high 20s, and and all these people are up in their price targets into the 20s where the stock is. Oppenheimer price target cut to 45 from 56. Again, they're banking on the trending of it, because as we see in the numbers, that doesn't really add up, in my opinion. Maintained underweight by Morgan Stanley. Price target raised to 22 from 20. I honestly would have kept 20. Soars on surprise earnings beat. Key partnership. Q4 performance driven by subscription growth. Increased AI demand. Hold Econoccord Genuity. Let's see what this says here about this contract. Added $350 million to the existing agreement, initially set at $100 million. That is very nice. But again, expanding the company's predictive maintenance program through October 2029. Company also said the increase follows full use of the original award, which supported deployment of C3.AI's predictive analytics and decision assistant Panda. The expanded scope will likely allow for a broader use of Panda. Okay, company shares were up. Very nice. Underweight KeyBank. Price target raised to 18 from 17. See, believe it or not, that I respect. Would have kept it at 17, but that's just me. Loss widens, as we see. Revenue was 108.7 million, was 86.6 million a year earlier. Q1 company projecting revenue of 100 to 109 million. Analysts are expecting 105.8 million. Near the higher end of that range, so we'll see. For 26, projecting revenue of 447.5 million to 484.5 million. Let me tell you, that's a 10% range. Analysts are looking for 465.5 million. What are the chances? So, I don't know. Pretty vague with it. But people love AI. But you can see as the revenue increases, you can see the losses began to widen. Looks like a slight tightening there in 24. So we'll see how 25 plays out. But again, we go back to something like SentinelOne. Right? And you can see the opposite. You can see consistent growth in revenue over the years and look at the losses getting tighter and tighter, right? More and more narrow, getting closer to zero. Losing $1.30 roughly for every dollar they were bringing in back in 2021. Then the net margin percentage is less than a loss of 90%, minus 54%, minus 35%, right? So you see the trend. And especially if the business keeps growing and the revenue keeps trickling, when you got to tickle up that revenue. But if the revenue keeps trickling up, in theory, it looks like the losses are going to continue to narrow. We're going to get closer and closer to net income positivity. And then, of course, we all know what happens when that happens. So that's why, in my opinion, I actually think currently, even off of the recent news with C3.AI, I actually personally would consider SentinelOne over AI, in my opinion. And E.L.F. Beauty, of course. Again, we just looked at this yesterday. Spoke about the big bounce back after earnings. Yep, we can see right here, earnings came out. Company beats top and bottom line. Yet again, they spent $1 billion to buy Hailey Bieber, I believe. Her, cosmetics line or whatever it was. $1 billion. And technically the company beat earnings, but just wrote a check for $1 billion, right? So people were like, oh, that's a lot of money. We got to pull you back. And then people are like, no, you know what? This is going to be better long term. It's going to bring, younger eyes. And supposedly they, now these are products with like higher price points, they were saying. So people are seeing, again, the writing on the wall. So people started to buy in on that dip as we came down to that support, looking for that longer term growth. And of course, the stock just broke up and out today. 111.84 on the close, up over $21, roughly 23.5%. And strong buy Raymond James. This came out. Price target raised from 95 to 105. Maintained overweight by Piper Sandler. Price target raised from 81 to 109. Again, people asked me just recently, inside of the last week or two, oh, what about Estee Lauder? Would you buy something like that? And I said, no, E.L.F. You want E.L.F. And again, going back from when I mentioned it would potentially touch and test that long-term support trend line down in the 50s, right? Think about that. If you watch the video, actually listen to what I said, begin accumulating shares and building a position down at 55, 53, 51 and a half as it was dancing around that support trend line, you are now, after today's massive pop, you are instantly up 100%. This is why I say there's a method to my madness, man. People charge $20, $30, $50 a month for these silly option trades, and it's essentially a complete gamble. We read the studies where they, again, ran option trades based on, bullish hammers and bull flags forming, and they were only correct about 60% of the time. That is not a large success rate, okay? So why not eliminate the stress, eliminate the guesswork, and just, apply the Buffett method for the most part across the board? And again, a situation like this, you buy a company that was raging on a massive dip as it pulls back into the 60s and the 50s, and boom, now before you know it, it's back above 100. That's why I've been saying shit's easy. Excuse my language, sorry to be cocky and conceited about it. This shit's easy. That's why I always said, you guys who could buy in size and you can buy shares, you're not forced to play like $20 option YOLO trades. You guys should be making money all the time. All the time. There's really no excuse. Especially if you're watching my channel. But again, these people charge you for option trades. They use AI now. I know some people just have a bot do it all for them. And then they'll set an alert. Oh yeah, buy calls on ABC, and it moves up a little bit, and then they're like, oh yeah, take profits. Look, I just made you a profit of 2.47%. It's like, really? Really? That's what you guys are paying for. And even if they hit big, maybe sometimes they'll show you options that only move, 20, 30, 50%, and then they'll tell you to lock in profits. Now, granted, that's a phenomenal return for a day trade, or even a week trade, really, if you think about it. Those are phenomenal gains. But with that, you kind of have to hope, right? With this strategy, as I say, in my opinion, I don't hope. I know. And again, you can go back and check the track record. It is very rare that I am just blatantly wrong. So that's why I've been saying, work smarter, not harder. Eliminate the guesswork, eliminate the anxiety. But, again, it's, I feel people make it more difficult than it is, right? Let's see here. CEO says the company's seeing no pushback from retailers on its plans to increase prices by $1. No, because they have loyal customer base. And of course, they're consistently growing, consistently reaching new highs, getting new orders. So $1 is not that big of a deal. Partially mitigate impact from tariffs. Again, we don't know exactly if there will be definite tariffs, how high the tariffs will be, right? So that's why, Wall Street sees the word tariffs and they instantly may be negative. But as we saw with something like Honest, right? People were worried the last quarter about tariffs. Are they going to start to, see a drop? And what happened? The company beats top and bottom line, and they're like, yeah, listen, everything will be fine. We know about the tariffs, but, hopefully we can push through it. And that's what I mean. That's why it's really not a problem until it's a problem. That's the way, in my opinion, I look at it. Quote, from a retailer standpoint, they understand, and I think they are actually grateful that we're not going all the way to the level that I think they would expect one to take. Company has only raised prices 2 other times in its history, while many of its competitors have raised prices regularly. The company was intentional to not hike prices beyond $1 to maintain its value proposition as an accessible beauty retailer, and expects to gain market share as other brands take more drastic price increases. Right? So think about it. We've, again, perfect comparison with something like Estee Lauder. They've been struggling. They've been losing market share. They've been missing earnings, right? With the tariffs, to keep shareholders happy, they have to bump up their prices potentially, right? Something like E.L.F is going on the volume business model, right? Saying, no, you know what? Our market share is increasing. We're getting more and more customers. Anyone who orders is, loyal, and they usually reorder. And that's why with all of the customer revenue coming in, we only need to raise it slightly. And we're not really known for this because we want to be viewed as the value brand in the space. So in my eyes, that's writing on the wall that revenue is really going to start pouring in, actually, especially as we know, the economy is a little rough. So someone goes out, they're looking for some makeup or beauty products. Maybe they'll try to find a decent product at the most attractive price, right? Yeah, and they spoke about this. Yeah, E.L.F Beauty's acquisition of Hailey Bieber's brand should help boost gross margin, EBITDA margin, and EPS at Bank of America. E.L.F has significant distribution opportunities for Rode, and with the brand set to launch in Sephora stores this fall, and expected to grow its brand and marketing investments, it should see further rapid growth. Rode also tightens E.L.F's relationship with Gen Z consumers, who tend to seek prestige-level products. Rode's products carry higher product prices, ranging from $18 to $38, above E.L.F's average of $6.50. Right? So that's what I mean. This new product, Hailey Bieber, set to come out, this fall, $20, $30, $40. Grab an E.L.F product, $6.50. Right? So they're playing like the volume value game, like McDonald's did almost back in the day, which of course they completely burned and threw out the window now, but you understand my point. So that's why, again, in my opinion, I actually think more growth is coming. They now expect full-year sales growth of 24.6%, up from a prior estimate of 11.2%. Wow. So if those numbers start to materialize, then you have to give credit where credit's due, because this may turn out to be one of the greatest acquisitions, in the cosmetic space here. And looks like E.L.F Beauty may have hit a home run here by acquiring it now, before it took off, and it might have cost several billion, right? Consider that. Morgan Stanley raises price target to 105 from 70, 50% raise. Yep, this talks about the buyout again. E.L.F Beauty has an average rating of overweight and a mean price target of slightly over $100. So now if we back up a little bit here, we can see again, even coming back to a previous trend line here that we broke. If we extend this out, bang, right? And let's just say now we just go up and up before pausing. You can see we're looking at about 140 and change. So believe it or not, of course, we could sell off, come back, retest this support trend line here at about 93 1/3, it looks like, right? Fill that gap maybe, and then bounce and go to 140s, maybe even 150. And get back to this line. So believe it or not, even though it did just rage and it's up 100% from, in my opinion, when I said I would personally be buying it, I do still feel that there's value here. However, of course, it did just really explode. So I always have to say that if markets really pull back, something like this that just raged can absolutely sell off and just pull back to where it was before bouncing, right? But just wanted to do a quick update on E.L.F. I know we looked at it yesterday, but big price target increases today. I mean, 23% move back above 100. You got to talk about it. You got to keep it positive, right? But I went on for much longer than I wanted to, but I'll end it there. So once again, stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually very quick to reply. Thumbs up algorithm, right? All that stuff helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.